Coach Hen, Money Moves, episode CMM4, how to make stock market purchases using CPI data. CPI is up, inflation is sticky, and the Fed might not cut rates anytime soon, even though the pressure's on. So what does that mean for your money? I've got 4 stock market plays that could help you profit big in this market. So check this out. What if I told you that CPI data sends a massive signal to the stock market? What would you think? Whether you're a trader or a long-term investor, this report changes everything. Stick around because I'm about to break down the best plays, especially for this particular moment. First, let's define CPI in case you didn't know. CPI represents the Consumer Price Index. Basically, to make a long story short, the CPI measures inflation as experienced by consumers in their day-to-day living expenses. In other words, if CPI is going up, then we're experiencing inflation, okay? Basically, when services and goods start to become higher than normal or as expected, therefore you have inflation. So let's talk about market sentiment and volatility. When you have CPI down, this typically indicates lower inflation, which means the stock market as a whole tends to go up. On the contrary, when CPI is up, this typically indicates higher inflation, which means as a whole, the stock market goes down. Let's talk about interest rate expectations. This is a great time to subscribe and hit that like button. Okay, so let's say CPI is down, interest rates are low, which means the stock market typically goes up as a whole. Now, let's say CPI is up, interest rates are higher, which means the stock market as a whole typically goes down. Based on the most recent CPI data, this seems to be the current situation for us. So let's look at the sector-specific effects. CPI data is up, which indicates higher inflation. Interest rates are higher. Typically, tech and growth stocks go down as a whole. Now, in the case that we have CPI data up, interest rates are higher, consumer staples and utility stocks go up. Lastly, you have CPI data up, which means higher inflation, interest rates are higher. This means commodity and energy stocks will go up. Okay, time to huddle up. This is what you've been waiting on. Here we go. Coach Hen's plays of the day. Let's get it. Okay, first play. If you know anything about short selling, you may want to look into short selling Tesla. It was up today. It's a prime time. I think it's got more room to drop. Take a look at it. I only recommend that you short sell if you've done your homework and you know what you're doing. And I don't recommend it for a long period of time. This is more like a trade in this particular case. Again, I only recommend this if you know what you're doing. If you don't, I want you to look for my short selling video that I'll have coming out soon. And this will give you some exposure, knowledge, so you can get some experience at short selling before you jump in. ProShares Short, S&P 500, SH is the symbol. This is an inverse ETF where you are expecting the S&P 500 to go down. If it does, then you'll have a profit on this particular play. On this particular play, for symbols SPY, which is SPY, and DOW, you would want to get put options looking for either of them to go down in order to profit. I'll leave the strike price and expiration date up to you. I'm thinking within 1 to 2 weeks as far as expiration date, and strike price somewhere around or just out of the money. Okay, here's a quick example. I took a $39 strike price DOW put. I bought 4 contracts at an average price of 82 cents per contract. Then I sold them all for $1.24 per contract for a profit of $168. That's 51.22% profit. That's crazy. I bought that at the end of the day yesterday and sold that out probably this afternoon. Play number 4. Find defensive and inflation-resistant stocks such as consumer staples. First one, Coca-Cola. Second, PepsiCo. And Procter & Gamble, PG. These are safe, solid plays that will make you plenty of money in the long term. Last but not least, here's a healthcare play with Johnson & Johnson, J&J. These are good, solid, long-term stocks in a market such as this that'll make you money in the long term. Thank you. Do your homework. I'll see you next time. Let's get it.